This is a special presentation on the Gold Trust Gold SHS right here. This is the GLD. It is correlated to the price of gold, and what I'm saying is that we're starting off today at 6:23 a.m., 7 minutes before the opening bell. Today's date is 8/11 of 2011. One of the things that we would like to be forthright and very clear is that in short-term processes, people flock to safe haven places because of financial turmoil going around the world. The problem that the GLD will have as far as the upside goes is the trade is too crowded and margin requirements are going to be going into effect as of now. When silver originally came down off its highs, it was because of the elevated margin requirements. Then when you have the reversal on the GLD, and let me make it clear, I'll pull up a GLD bid and ask right now. Okay, and the GLD moves different than the price of gold because remember it's an instrument, but it's gapping down $2 right now in pre-market. We're about to open. That was a high. The margin requirements go in. As this goes lower in price, margin requirements have to be met. That, in return, forces more downside selling, which ultimately, MMTs, supports your short sells. When they roll up to resistance, they roll over because this is the beginning of that trade. It's just like that SLV when those margin requirements started. This trade is very, very crowded. You hear me? This trade is very, very crowded. And we're about to open, and you can see here within 5 minutes of the opening bell, the closing price 174.58, and you can see 172.06 by 172.11. And with the margin requirement going into effect, with the gap down, if people were buying up toward the high, they're going to be the first ones taken out. Then there'll be lower levels that will be taken out at mathematical levels. Another thing, the high frequency machines are going to pick up on this, and as it turns from a short-term overbought safe haven place, we went from 160, 14 points on the GLD in a 4-day period is quite a move. But we know that the price of gold itself was going up $40, $50, $60 a day, like 3 days in a row. So MMTs, when they roll this up and they hit this at resistance levels and your platform shows you a mathematical equation that is descending in value, that means that price action becomes weak at that point in time. Okay? So we know that part of it. And this will be the key to that trade. What I will be doing outside of that is I'm going to be going over here tomorrow's expiration, and I'm going to click on 8/12. These expire Friday. And the funny thing about it is when they wrote these things for 8/12, they only went as high as the 170 put. They didn't even go higher. Here on the 8/20 though, we're going to take a look at the 175 put in the money. We'll take a look and see against the 175 call premium. Not only that, we'll get down here to where the 170 call premium was. And remember that these contracts don't have a high yield. And there's a 170 put. So we're putting all the calls and puts in here. All right. So we got a put and a call and a put. And we got different dates. This is a monthly. And that's tomorrow. The weeklies expire on Friday. And we're overbought. And remember that the yield, and I'm going to go to page save MMTs, and we're going to we'll address this on the opening bell.